We've also got decision day back at home in Threadneedle Street. You've got the Bank of England there. The economists don't expect any policy change. That's not really on the agenda for the central bank. It hiked rates for the first time in a decade, I should say, last month. Now, the focus is going to be on any comment on the market pricing of 2 more increases over the next 3 years. Lena Komaleva, let's just bring you into this conversation. You see, you look at the UK data from yesterday, and I'm sure the British papers at home have the full coverage on this. The claimant count, you saw the numbers, the first sort of shift in the unemployment rate, it rose. There's a few cracks in the Brexit wall of employment. Essentially, I would say Carney's hands are tied. I think the market's now got too far ahead of itself, given the economic data, given the slash in the growth numbers relative to the inflation. I just don't see the ability to do these hikes next year. Do you?
I agree, Manus. The Bank of England is in a holding period at the moment. Although policy officials were hoping to persuade the markets that there are more rate hikes in the pipeline and use that to contain further weakness in sterling, which has been the predominant factor behind the overshoot of inflation over the last year, and indeed constituted the bulk of the inflation margin over the 2% target in the November print of 3.1%, which will require the governor to explain why the Bank of England is not doing more, if anything, to contain inflation. At the same time, however, it is really a big question mark whether the Bank of England can deliver more rate hikes. Although inflation might have peaked, it is not going to be going down very rapidly. And based on yesterday's labour figures, it looks like it will be 2020 before inflation falls below the current pace of wages growth. And that means that although the degree of wages squeeze, real squeeze on incomes in the UK has probably peaked for now, it will not be reversed anytime soon. And that's, of course, a big trade-off in terms of weak demand growth ahead and the uncertainty of productivity that the Brexit effect on investment brings.